Hello, it's Friday the 11th of June and this is your week at Capital Economics. I'm Jennifer McKeown and I'm the head of our Global Economics Service. Inflation is still very much the hot topic this week, with the latest data from the US revealing that the headline CPI rate rose to 5% in May. That was above the consensus forecast but almost exactly in line with our own. Led by Paul Ashworth, our US team hosted a drop-in this week to delve into the inflation data and answer our clients' questions about the outlook. They're well on top of the transitory factors that are boosting inflation at the moment, but they warned about the potential for longer lasting price pressure, particularly stemming from the US labour market. But that picture of sustained price pressure isn't common to all economies. Our Europe economist Jessica Hines published her in-depth focus piece this week, explaining that there is still spare capacity in the Eurozone labour market and that temporary labour shortages there won't really boost wage growth. Our chief Asia economist, Mark Williams, wrote an interesting piece about Taiwan, highlighting that while the economy is operating well above its potential, there are very few signs of inflation pressure. And Shilan Shah published a piece about EMs more generally, explaining that while price pressures should ease over time in most economies, there's a risk of a sustained pickup in Central Europe. So in all, I think it's fair to say that the inflation story that we're telling is much more nuanced than the one that you might read in the headlines. It's not all about inflation, though. Our EM team have published their capital flows monitor this week. We explain that net capital outflows have eased and offer reassurance that most EMs are in a good position to weather a renewed pickup in outflows if or when it comes. And in our financial risk monitor, we focus on sovereign debt problems and highlight the growing risks related to political turbulence in some Latin American economies. That's still only a fraction of our research, and I'd really encourage you to browse our website to see the huge range and depth of our coverage. We'll be back next week, but in the meantime, thank you for listening, thank you for reading, and have a great weekend.